much of it will be taxable? How much of it will be tax-free? Punitive damages are always taxable. Punitive damages are always taxable. Okay. Now now see, the medical expenses is now, okay, if you look at theory, now this is a little confusing because in some of the, and this is somebody who's in the US doing this, I would want you to follow this up and let me know. But generally, the place where I picked this sim up, they said that 50,000 would be taxable, which is a punitive damages. But if you look at the final lines, it is stated that if the amount is only for emotional pain and suffering, it is always taxable. If it is only for emotional pain and suffering. So if you go by the legality, probably 55 should be taxable and 5 should be outside the tax net. But one of the content providers from where I picked the sum up, they had mentioned 50,000 is taxable and 10,000 is tax-free. Okay. So general rule, now this is something which is a little hazy. Let me check and get back to you on this. But if I look at what the law says, probably the amount which is retaining only to emotional pain and suffering, that becomes taxable. The medical expenses would not be taxable. Okay. But this is something that's a little gray area right now because there are two different content providers who gave me two different answers. So I'll have to go back and I'll have to check what is exactly the thing. But in my opinion, I'll go by what I had taught in the earlier classes. I will tax 50 and I will tax 55 and I'll keep 5 outside the tax net. Okay. But anybody who gets more clarity on this, you can participate in the class and we can resolve this. And give me some time. I'll look into it and I will let you. Okay. So in my opinion, 50,000 will become taxable as punitive damages from the accident plus the emotional pain, which is 55,000. And the balance, disability insurance is 0 because there was nothing that you're not. Compensatory damages from the accident would be 5,000. That would be outside the tax net. Is this clear? Okay, but we are open on this. We'll see how it goes. So I got the full amount. I've dealt with W2. I have dealt with the second annexure also. Okay. Now let's go to the question again. Okay. Now see, the best part is in your exam, you will not have to go back and forth so many times because the way the format will be made, you will have all the annexures at one click and you can keep the main question there. Okay, so that will be easier. As the beneficiary of Frank's life insurance policy, Brenda received a 150,000 lump sum distribution in year 3. Is this amount taxable? Tax-free. Yes, guys? Is this amount taxable? Tax-free. Non-taxable. Every time you get it as a beneficiary for the death of somebody, it is always a non-taxable figure. So what I'll do, I'll go to my schedule and I will pick up. So basically the disability insurance, you did not even receive it this year, goes away. Life insurance proceeds of $150,000 will be tax-free. Okay. So I've done with all of this. Now you go to the next one. She also received a check for $1,500 from Frank's employer for vacation pay that he had accrued prior to his death, but was not recorded in his income tax return because he died. So there was income for the decedent, was not received, but earned by the decedent before the death. Now the amount received by somebody else. That's income with respect to a decedent, and that is going to be taxable in the hands of the decedent. So this $1,500 will get taxable in the hands of the decedent. Okay. Unfortunately, Brenda struggled to pay bills because her medical insurance did not cover her physical therapy and Frank's funeral costs were expensive. Brenda had been able to work out a payment plan, which includes restructure rehab, canceling $800 of the amount she owed them. As a result, Brenda has received a Form 1099-C from the rehab center. I go to the form straight away. So I've dealt with this. I've dealt with this. Now I go to the form. So I know 800 has been received. I know 800 has to be booked as cancellation of debt income. So I go here and I record 800 straight away. Okay, I go back to the question. Okay, the grocery store where Brenda shops also sells lottery tickets. Now, this is a chocolate question. Let me see who answers this correct. Okay, Brenda likes to occasionally take a risk and will sometimes buy a ticket. In January of year 3, she purchased and won $5,000. She kept a shoebox of other lottery tickets that were losers, totaling $400. Okay. If yes, tell me how much should I be putting as lottery winnings and how should I be showing the losses? Yes, guys. How much is a lottery winning? How much would be the loss? 5,000 is the winning. What about the expenses, Ketki? 400. How much can I take and where? How much can I take and where? If these expenses would have been, let's say, 6,000. Let's say these expenses were 6,000. What would be your answer? If these expenses was 6,000, what would be your answer? Okay, yes. So we draw a concept here. Whatever is the winning, it goes in total in gross income. In gross income, you're not going to net off. And whatever is the loss, till your gross income limit, you're going to take it in Schedule A. So in my example, if this was 6,000 instead of 400, I would have taken 5,000 in gross income, 5,000 in Schedule A, and the balance 1,000 I would have carried forward for next year. And then next year, if I would have had gambling winnings, I can set it off only against gambling winnings, not against any other heads of income. Is this clear? That is what is meant by this question. So what I do, I go back to my form and I put in 5,000 as gambling winnings. Let's do the form a little later, guys. First decode everything, then we can follow this up and take it to the form. And I'll tell you why am I saying this. Okay, just allow me some time. I'll tell you why am I saying this. Let's go to the next one. Brenda decided to invest the life insurance proceeds, 1,50,000, and windfall from the lottery ticket, 5. So $1,55,000 in several different investments. She's a intelligent lady. She received the following additional income. Okay, thank God she didn't want to go and play the casino once again. Okay, so what she did, there was a lot of interest that she generated. Now, quickly, guys, 260 was a mutual fund interest from tax-free government obligations. Now, see, we don't know. If they would have written government obligations alone and if they would not have mentioned this, I would have made it taxable. But they made it very clear it's tax-free. So it will not be taxable. 785 on treasury bonds. Treasury bonds, taxable, right? Treasury bonds, federal bonds, corporate bonds, treasury bills, all taxable. Federal bonds, taxable. So this is taxable. Okay. Let me update my working sheet. So my interest income is, how much was it? 785. That's taxable. My interest that was tax-free was 260. Okay. Then I go back. There was an interest of $50 associated with an amended federal income tax refund of $1,300 from year 1. Form 10. So, and see, the moment you see this, your mind should know whether this is 1,300 should be taxable or not, right? Should it be taxable or not? How do you determine this, guys? There was a interest and there was a refund of federal income tax refund. How much of it is taxable? Tell me the figure. What is the data point that you need to determine whether 1,300 is going to be taxable or not? Everything is there in the question. Open your mind. But see, all of you guys are wrong. This is federal tax refund. A federal tax never gives you a tax benefit. If it's a federal tax refund, it is always taxable. Always taxable. Ritika, always taxable. But provided she itemizes. They have made it very clear this lady always takes standard deduction. So break your concepts. It should be so good that you don't get confused when you're reading the question. If it's a state tax refund, I can escape it from the tax net. If it's a federal tax refund, it will always be taxable. See, any kind of a refund will be taxable, okay? But federal refund, I will not even go ahead. It will always be taxable. But the point is, I go to standard deduction. If she's taking standard deduction, then anyways, there is no tax benefit that I get, right? Federal taxes are always taxable, right? Federal taxes have always taxed it earlier. Oh, yeah, Ritika, you were correct. See, federal tax, I have never got a tax benefit, right? Okay, I was wrong, guys. I'm correcting myself. See, federal tax is always taxable, right? So when I paid the tax, I would have already paid the tax on it because there's no deduction that I get from there. Can you understand, guys? Please understand the implication. If it's a state tax, I can get a, wait, I'll tell you. If it's a state tax, it is a deduction that I get. So when I get a refund, the refund may be taxable. But if it's a federal tax, okay, but if it's a federal tax, for a federal tax, I never get a deduction. That means I have anyways paid tax. Now, if I don't get a deduction, whether I get a refund, whether I don't get a refund, I don't have to tax it again. We understood this. If the federal taxes, I have already paid tax on that figure, right? I've already paid tax. So now that refund will be escaping the tax net. Because federal tax, I will never take care into the picture because there is no tax benefit that I get from a federal income tax. Is that clear? State refund is taxable if you take a benefit of it. That means if you itemize. In this question, we are not itemizing. In this question, Brenda always takes a standard deduction. So 1300 will not be taxable, but 50, which is the interest on this refund, will always be taxable. Is this clear to everybody? So 50 will be taxable as interest on federal tax refund. Okay, and the 1300 that you received will be outside the tax net. Is this clear to everybody? Now there's only one information which is pending. Form K1 for her investment as a 10% shareholder in some corporation. Okay, now I know that form is given to me. I will go to that form, which is form K1. I go to this form, I look at it. I have $4,400, which is given to Brenda Smith. So can you see, every person who gives you the money will also give you a proof of that money coming to you. So I go to my form and I know that 4,400 should be taxed. Is this clear? 4,400 should be taxed. Now for this, now this is your main deliverable, guys, okay? But in this case, since I've done this, I have just cross-linked, so you should be able to know this. There is no refund that should be coming. This is your schedule 1, okay? And I think this is form 1040. Form 1040, page 1. So what do you do? The real estate royalties 4,400 has come already. Gambling winning 5,000 has come already. Cancellation of that 800. Other income. Now see, this is important, okay? And I want you to start this because this is the figure which is not a direct figure. You will have to add up certain figures to get this. So what are those certain figures? It's the IRD income. See, it's the IRD income and the punitive damages because these are other income which may not be there in every taxpayer's return. So I'm going to add up these figures and I'm going to put it in other income. I'm going to add up all the figures to give me, I'm going to add up all the figures to give me the miscellaneous income of 56,500 and the figures will just flow through in your main forms. So I have my W2 wages of 52,200 tax exempt. Okay, can you see this interest, even though it is outside the tax net, but you still have to report it on your form. I will show you where it shows. Taxable interest is 835, which was $50 of your refund and another $785 that you received on account of your federal bonds. And then this is just flowing from here and you will be reporting the final income. So my suggestion is don't fret with the form straight away. If you know the details well, arrive at everything and then go straight away and fill up the form. Okay. So this is your form. Fill this up. Okay. So I know this amount is 1Z. You're adding all the lines. Okay, she's messed up everything, guys. Okay, what you do is, my suggestion is first complete this form. Okay, form 1040 should be completed in the end. First, flow through all the details and make it in your schedule form. And then we'll talk about the other things that will come in. Is that clear? Don't skip steps. Do it the way you would do it in your real life. I will first finish the schedules and then I will flow it in the form. So what I do, if there's a tax refund, was there any tax refund? No, this lady has not understood it properly. So nothing would be taxed in tax return. Now here also she's put up a wrong figure. Why? Because the amount that she received totally was 4,400. Gambling, she has netted off both the figures. I will not net it off. I will take the full figure and I'll put it here. An itemized deduction schedule A, I'm not being shown, but if it was here, it would be this. Then I go to cancellation of that. This is correct, thankfully. Now, in your main exam, guys, I don't think that these figures will automatically flow. I am not too sure whether the figures will automatically flow because since it is not attached to any software right now, I think you will have to make the changes. If it is, so don't assume that the totals will be straight away correct. If they give you the blanket form like this, probably the totaling will not happen directly. So please fill this up and check it. Even if it is happening in your exam, I don't know, but check this up. Okay. So what is the other income? Can you tell me? What are the items for the other income? There were two items, right? The first item was my punitive damages and the IRD income. So both of them would flow up to 55,000 rupees, $55,000. Is that clear? Oh no, the IRD income was 55. No, it was an error, right, guys? I had 5,500 and another 5,000, isn't it? So my other income here, this is 56,500. Yes. So this will become 56,500, guys. Okay, I'm sorry. My bad. So this will become 56,500. So punitive damages and emotional loss and IRD income all will add up to 56,500. Is it clear? Gambling will not come here, Anirban. You will see it is on the main form. And it is in the beginning. So you'll have to declare to IRS that you're a gambler, right? When you file your return. Okay? I'll show it to you. Okay? So add this up, guys. What will be the total other income? What will be the figure? Just let me know the total figure quickly. Yeah. So add this up. What will be the total figure? It will be wait. It will be 66. No. It will be 62,300. Okay? So the total figure will be 62,300, which will come to your 62,300, which will be part of, wait, no, sorry, I think this is an error. It will be 56,500. No, and 66,700, right? So I will have it as 66,700. Is this clear to everybody? Yeah? Is it clear to everybody? So we have filled up a form 10, a schedule 1 of form 1040. Now I go to the main form and then I just fill it up because of the fill. So now here this is wrong for sure. I know that my wages was 58. It was 58, right, guys? No, sorry, it was 52,200, right? Sorry, I am writing the wrong figure here. So this was 52,200. Oh, I had already corrected it. Sorry. Then there was an interest figure that was 260 and taxable interest of 835. Both of, so tax exempt interest was 260. So if you look at it, tax exempt interest would still be 260 and this interest will be 835. Is this correct? 830. This is correct. And the other income of 66,700 will flow here. 1 second. Wait. Where is your, oh, 1 second. So this was 52, 200, 835. This figure will flow from the, oh, this I think, oh, no, no, no. I think the gambling income is where? 1 second, guys. My bad. So this is 56. Oh, no, gambling is here only. Sorry. Gambling is here. This 5 is separately added, right? Yeah, 1 second. So 1 second. So I go here. 2A and 2B. Yeah, tax exempt interest is 260. No, 2B. Oh, yeah, 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 yeah. Sorry, sorry, sorry. Yes. My, where is it? Why am I not getting it? Wait, 1 second. This is tax exempt interest. This is taxable interest. Just tell me quickly what will be the totals that will flow here. Because this automatically comes, right? So this figure, I think, will be 66,700, right? And then you add this up and tell me what is the final figure. Quickly. This figure will be 119,375, right? Is this correct, everybody? Yeah. Is this clear, everybody? Okay, in your totals, do not assume that the totals will be correct. Okay. Okay. Anybody any questions? Is this clear? How is the question, guys? Good. So this I feel is good now. Somehow this was not there earlier, and people used to just look at the form as if they want to, they'll go. If they don't want to, they would not. Now I think that's a good thing that they've made it compulsory for you to be aware of how the forms are flowing and where the forms are coming. Okay, what is discrepancy? I've already given you the concept. Mostly we use some automated softwares, and the idea is you put all the data dump there, all the support documents would be given. So generally, what they tell you is they put all the W2s and all the 1099s and everything goes in, and the prima facie cut would be done by the software itself. But then it is the ultimate responsibility of the TRP and the taxpayer eventually, where you have to fix it and know whether all the imports, the totals, the sanity check has been done properly or not. Okay. So, okay, this is something that you can read on your own. This is something that I want to talk about. Now, there are two kinds of error messages that will flash. One is information. So they'll tell you, hey, this is also there. Have you missed it? Please ensure that it is not missed. You can or you may completely ignore it. So if you want, you can address it. If you want, you may just completely ignore it. So the more experienced you are, you start understanding what to ignore and what not. Initially, I think if you're a novice, you would want to go through each one of them and understand whether you have to consider it or not. The next kind of errors are computational and civil. These are errors that you have to resolve before the return can be finally submitted. Now, I remember when I was filing my return last year, and I had this whole dhobby dump of things that are there in my return. Because my husband safely has transferred everything that is complicated on my return. And I remember there were so many errors. And somehow I feel the Indian IRS system, they have not evolved so much that for every error, there's a scientific reason and I can go that. So what happens is there's an error and then your mind keeps on wondering what is the error, how to fix it, what is the error, how to fix it. The error and the fixation is not very clear in India still. And I remember I spoke to one of the CAs and this guy was like, quick, quick, quick. Okay, this is the error, this goes this. So the error names, the error solutions are not too, kind of standardized in India till now. In the US, it is. Or probably in most of the softwares that you're using in the US, it is. The case that we're going to pick up today, that will clearly mention whether the error is informational or severe. But even if it is not mentioned, you should be able to understand how to make good of that error. Okay. So let's straight away look at the question. Okay. If you look at it, it is a similar question, but we have a lot more annexures in this question. That's number one. And second, the best part is I don't have to fill up anything. It's a multiple choice thing. So I look at the thing, but again, the understanding is there. That understanding has to be there. What will be tested, what will not be tested. And then how it flows here, it's something else. Okay. So let's look at the question straight away. So this was example. All of you who have not read this question, please be alert. It's a good question. Okay. So we'll take it through. Richard Branson is, by the way, his books are really good. Okay, is preparing his tax return for the year 2023, which is the current year tax year. The software he's using is creating diagnostics that are preventing him from electronically filing his tax return. He would like you to review and clear the diagnostics in addition to the attached exhibits. Richard provided you with the following information to assist your review. This guy is single, so this information is important for me. They've already told me the year here, so it's awesome. He's 24 years old. Richard works part-time for Super 9 Market. Okay, so there is some data given to me. There are various exhibits given to me. I have to. So what I'll do is probably first, before going deep, okay, there are some cases. There are some 9 cases that are given to me. And there are how many extras given to me? There's an extra 1, 2, 3, 4, 5, 6, 7, 8, 9. Awesome. So basically, they're giving me some situational cases, and I have to, and they've also given me a wrong 1040 and a wrong schedule 1. I will have to fix all of this, and then I have to go back to my form and I have to fix schedule 1 and I have to fix 1040. Is this clear? Now, guys, understand, you can't choose your parents, you can't choose what CPA set for you. You have to do this rather than wasting time and thinking, why I did not take this paper last year, I should have finished it last year. That's something which is like a constant. You can't change it. Work on the variable. It's it. So what is the data given? Now we'll look at the first question. So here what I would suggest is I look at the question and then I go and solve the answer. Okay, because now I know it's a piecemeal question, isn't it? I can piecemeal it to different ones. So I look at the first one which says alimony received. So this is severe. If a diagnostic is severe, that means I have to set it. I cannot go ahead without setting this. Alimony received was entered on Schedule 1, page 1, but the year of divorce and payer's social security number is not provided. So, they don't know what the alimony was. Okay, I'll go back and read a little bit of the information. This guy is preparing his tax return. He takes a software and given me the schedules. Single, that means the moment I see the alimony, I know that there was a marriage and there was a separation. 24 years old, works part-time, also attends a university for which he gets a scholarship. Participated in the game show, won something, there was an entrance fee. Aunt passed away, there was some inheritance that was given and something to do with it. Some cancellation of debt, okay. There was a lawsuit for sexual discrimination settled in the current year. The various exhibits, there are some source documents and draft tax forms prepared. Again, there is 1040 and Schedule 1 that I have to correct. Then address the software diagnostics by selecting the appropriate answer. Okay, so here what they want me to do is, they have given me the source documents. Now they have given me the incorrect form 1040. I have to select the correct drop down. And I have a drop down in which they give me a situation. I look at the annexure, I choose the correct answer, and then I go and change the form. That's how the data would flow here. Is it clear? Everybody, can you go ahead? So the first question, there was an alimony. The amount was not entered because the year of marriage was not mentioned. What should be the alimony? Okay, so I go to the annexure. I look at the first annexure. Let me see who is the first one to answer the question here. So what is the question? They're asking you what amount of alimony should be there. Is it 0? It is 300? It is 3600? Or no action required? But before you do this, I have to see what the form says. Okay, 1 second, guys. Let me open the form relevant to question. 1 second. For those of you who do not have the form, please go and download it right now. I want you to work on this form with me. Okay, so I go to Reg Assents. Incorrect. Okay. Okay. So I go to form schedule 1 and then I go to the master form 1040. Okay. So these are the two forms given to me. So there's some total amount coming from various areas and they've also given me a schedule 1. Okay, so there is some alimony received of 4800 which has been mentioned. I need to know whether this amount is correct or not. Okay, so I go to the annexure and I look at the first annexure. I want the answer. Let's see who goes through all of this to quickly tell me what should be the answer. What should be the answer? A lot of data is given. You should know exactly what you are looking for in the question. Awesome. So I will not read the entire data that's given to me. I look at the annexure, look at the keyword. I just want to know if it's alimony received post 31st, post 1st of January 2019, it is not going to be taxable. So I go there, and what I do, I straight away go to the form, and then I go and clearly mention, okay, sorry, this is done. So I am removing this. Okay, so what I do, I go to the form and I immediately change the alimony received to 0. No alimony. Is this clear? Let's look at the next one. Total unemployment compensation amount imported from Form 1099G does not match with the amount reported on the main form. Okay, so what they had given, let us first look at what they had given. They have given an unemployment compensation of where is the unemployment compensation written? Yeah,